Okay, that is some important commentary coming in on the US markets, and that's all about what's happening in the global markets. How will these cues impact our own markets? We have our domestic cues and earnings as well to track. We have a research team joining in to tell you just that, the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, happy Friday to all of you. Finally, the last day of the trading week is here. But Ekta, before that, can you tell us what is the market setup looking like today?
Thanks for that. Well, yes, the markets did end with minor gains yesterday. The Nifty closed above the 20-day moving average of 17,872, so that was a positive. But most of the Adani stocks continued to be under pressure. We have MSCI news today as well to reckon with. FII's net sold 144 crores, which was the lowest sell figure that we've seen since the 23rd of Jan. So that was a positive. And the DII's net sold, and this was the first net sell figure from the DII since the 5th of Jan of 2023. They net sold around 205 odd crores. But the larger picture for the Indian market is the strong MF inflow, which is supporting sentiment. We saw it for the month of January. Equity inflows came in 70% higher on a month-on-month basis. SIPs continue to be at a record high. So the underlying sentiment continues to be strong for our markets. US CPI on the 14th of Feb, which is next week. Global cues as well as earnings to be in focus until then. The US markets ended lower. Asia is largely mixed. SGX indicating a bit of a soft start. Next level to watch would be the 100-day moving average. Also watch for the week-to-date performance and how we close up, because the Nifty on a week-to-date basis is up around 0.2%. Mid-caps have done better and the Bank Nifty is a little flat as well. In terms of results, M&M, ABB, Glenmark, to name a few, but there are a huge number of numbers which we can expect. So the broader markets especially will be in focus on account of it.
It will be. You spoke about a lot of stocks that will be in focus. So let's go across to Vivek because he has the entire list as well. Vivek.
Well, good morning. So many companies are declaring their results post-market as yesterday. Let's have a look at them. First on the list, Aurobindo Pharma, reasonably good set of numbers. Revenues coming in above the CNBC TV18 poll, over the 6,400 crore mark. Profitability slightly below the poll, close to 491 crore. HPCL, good beat as far as our own estimates were concerned. Net profit coming in at over 170 crore versus a loss that we were actually anticipating. Voltas, it's been a disappointing set of numbers from the company this time around. Multiple one-offs have actually marred the earnings. Revenues slightly above the poll, coming in over the 2,000 crore mark. However, the EBITDA has been a big miss, coming in at 76 crore versus our estimate of 128 crore. On the back of that, on the bottom line, there has been a loss figure. United Breweries too, the results have been below what the street was anticipating. Revenues coming in at a little over 1,600 crore. However, on the bottom line, there has been a surprise loss that the company has actually declared. LIC, while the numbers are not comparable on a year-on-year basis, however, the value of new business has come in at around 1,800 crore. Analysts are not very enthused with the results that have been declared by LIC this time around. Lastly, new listing Sula Vineyards, good set of numbers from the company. Profitability up almost 15% and margins to quite strong on a year-on-year basis.
Okay, so that is about all the stocks that will be in focus today. But it's time to talk about the F&O space as well. Manglam is joining in with all the updates. Hey, Manglam.
Good morning. So, everyone's looking for some consolidation. That's the word, that's coming in from the F&O space. Yesterday as well, while there was a bounce of about 110 points from the lows of the day, the Nifty risks a bit of a 20 DMA halt because it's consolidating around the 20-day moving average of 17,872 itself. It was weekly options expiry, so the call writers at 17,900 actually kept the lids on the way the gains could take place yesterday. Muted cues coming in from the F&O space, from the cash market space as well. Most selling from DIIs and FIIs perhaps on account of the Adani Group stocks. At the same time, we saw, the Nifty Bank underperform as well. Not too much happening in the index futures where the FIs are still net long at just around 19% with short positions at 81% as well. All eyes now on next week's expiry. What are we looking at? 17,900 calls. Sees a fair amount of writing for a premium of 120 rupees, telling you levels upwards of 18,000 would face a fair amount of support. In fact, at the lower level, however, we are likely to see some support around 17,700. That's what the 17,900 put writers are hoping. 17,750 to close to around 17,800 is where the support lies. In fact, the SGX Nifty opens right in the support zone itself. On the way up, call writers are also looking at the 18,000 call for a premium of 74. 18,050 to 18,100 likely to see a fair amount of resistance. On the way up, we do have the 100-day moving average, which is resistance for the Nifty, which is placed at 17,943. But at the same time, it was the Nifty Bank which was leading the rally, and it's the Nifty Bank which is failing to cross important moving averages, both 41,669, which is the 20-day moving average, and 41,639, which is the 100-day moving average. So for any sort of recovery on the Nifty, if the Nifty Bank crosses these levels, only then can one play for the recovery on the Nifty.
All right, so that is the entire market setup. Thank you guys for joining us and prepping us up for this trading day ahead.